Vanguard, I think you just need £100 to invest. Trading 212, I think you can start with like £5. And again, this is just massively varies depending on your country. So do some research to figure out what are the most reputable and legit platforms in your country, and then you can invest based on that. Now, there's two other categories of stuff that I invest in. I invest in real estate. So I've got a few properties in the portfolio. We're not going to talk about that because I've done a video about that over there, buying versus renting, and that's usually outside the range for most people until you've already made a lot of money to be able to afford a deposit on a house and get a mortgage. And I also invest some amount of money in crypto. Yep, and as we can see here, the total value of my crypto portfolio is 200,000, but I have actually lost 65,000. So I've put in 265K into crypto and currently it's worth 200K. What can you do? I'm hoping the price rises with time. So generally, when it comes to recommending investing in crypto, people often ask about this. I would say if you want to take the gamble, fine, but make sure the only money you're putting into your crypto account is money that you can 100% afford to lose. Don't try and think of investing in general or crypto in particular as a get-rich-quick scheme. But generally, if you want to invest your money in stocks and shares, as Warren Buffett says, and as I do, and as I generally recommend, even though I'm not a financial advisor, not financial advice, etc., it's pretty reasonable to put that money in a stock market index fund like the S&P 500, for example. By the way, if you're enjoying this video so far, I'd love to hear in the comments, what's been your biggest concern about getting started with investing? What is the thing that's holding you back? Part 4, fast lane investing, the alternative approach to building wealth. So far we've talked about what some people would somewhat disparagingly call the slow lane approach to building wealth. There's like the slow lane, and there's the fast lane. Now, this is terminology from MJ DeMarco's book, The Millionaire Fast Lane, which is actually a really good book. But the basic idea of slow lane investing is that, hey, I've got some money, I'm gonna do my day job, I'm gonna save up 10% of my paycheck, and every month I'm gonna put $10 into my savings account. And then I'm gonna invest that money in the S&P 500, and then 50 years from now, by the time I'm 65, that money will have compounded and then I'll be a millionaire. This is a very, very slow form of investing. It's a very slow way to build wealth. And certainly it's fine to invest in stock market index funds. I do that as well. But there is another approach to investing, and it's worth talking about that here because when we hear investing, a lot of us just default to thinking, oh, I guess I should buy stocks and shares, or I guess I need to buy a house. But if we really think about it, what is the point of investing money? The point of investing money is for your existing money to make more money further down the line.